Hello everyone, hope you're doing well. Welcome to another episode of Monday Markets. We have a new Monday close to deal with and also some lower timeframe price action that may be helpful. So as far as the monthly goes, there isn't a terrible amount of signal on this timeframe for the time being. We'll have to take our clues from the weekly and the daily. And the reason for that being is the monthly isn't at a monthly inflection point. If we look at where the clear resistance is on the monthly, it's closer to 35k, which the market hasn't reached. If we look at where the clear monthly supports are, they are the breakout level at 24k and also the deeper cluster that we spoke about at length at 21k or thereabouts. At the moment, we're just in the middle and stuck between those two levels. The push to resistance from current prices is about 20-30% away, and the push to support is similar, sort of, 20-25% away. So the monthly is far away from relevant monthly levels and isn't giving us any indication that, it's clear one way or another. It's fairly far from support. It's fairly far from resistance. It could push up and be bearish. It could push down and be bullish. So at the moment, that's not a lot of help to us. I think generally speaking on the monthly, if the market does continue to pull back from here, it is worth taking a punt at this 23k type of area, strictly from a market structure point of view, where if we look at a line chart, you'll see that this move above 25k will have been, or 24k will have been the higher high, and then the dip back into that level, if it gets there, would be the anticipation of being a higher low before reaching the monthly target. Now again, that's some way away. We're still not trading any of those levels, and that's why the monthly time frame for the time being, until we reach either 35 or deeper into the 20s, is of limited use to us. If we want to look at present monthly price action, the best we can do from the close, if you want to have some indication, is by mapping out the high made of the impulse candle. You can kind of see we had some spikes around there and no acceptance through it. I think that's of limited use. I'd much rather use the monthly time frame for levels and closes more so than highs, lows, and opens. But that's really all I think we can reasonably gain from the monthly time frame. If it goes deeper down, there's good support. If it goes higher up, there's good resistance. At the moment, it's essentially equidistant from both. So that's of limited use to us outside of monthly highs, monthly opens, which I think in general are slightly noisier than I'd like. As a result, we have to get a lot of our information and our signals and, if you will, our early warning systems from the lower timeframes, specifically the weekly and the daily, and those aren't particularly promising for the time being. So on the weekly, I was really hoping, which is a dangerous term to use in trading. But nonetheless, I was hoping for a push closer towards 32, 33k. That to me is the clearer weekly level, and the market could still get there, but we have to deal with what's in front of us, and it seems like we're running into issues before trading there. In particular, if you're following Don's charts, for example, he's put a lot of emphasis on this pre-breakdown cluster, which is a very generous way to describe a single green candle before the big nuke. But nonetheless, we have to take our evidence from the market in terms of which levels appear to be important, price sensitive, and giving us trades for the time being. And so this weekly resistance ahead of that 32k weekly level at the moment appears to be more important. I will say it's not a totally sort of nonsensical level. There is some structure there, and I think more broadly the fact that it's around the 30k round number adds some significance, even if the candle structure in itself isn't terribly significant. And what we can derive from this weekly chart is, at the moment, the market is bearish at this resistance level, right? So if we look at the price action available at this purple box, we essentially had like an overshoot at first and a weekly close above that then got engulfed and then retested the level, finding resistance and closing there for the time being. So on the weekly time frame, while the level itself isn't optimal, the level that the market seems to be respecting is acting as resistance and forming bearish retests, which isn't great. To be completely frank, that adds the further obstacle of, even if this sort of intermediate 29k, 30k level gets reclaimed, it wouldn't be the clearest signal in the world, because if we start pushing above it and reclaim this consolidation and push further, that doesn't make the relative and dynamic risk reward of getting long much better, because we start pushing into new weekly levels, and we know there's monthly levels at 35 as well. So it's one of those tricky ones where even if you have a break of resistance and a higher high, it's a higher high into an area that's no clearer than this one, and no more bullish than this one necessarily. So that's a bit tricky. Ordinarily, you just have a level of resistance. You can say, well, if the market breaks above it, you can look for a long until the next level. The issue is the next level is pretty damn close to where we are now, and it's arguably in technical terms, quote unquote, better than the one we're turning around from. So that usual kind of decision tree of if it breaks resistance, it'll go up is slightly muddied by the fact that it'll go up into an area of better / still resistance. So that's not great. And I think that's the point that Don, not to speak for him, was getting at, that the relative risk reward of getting long at around 30k just isn't great, because that area is just kind of cluttered with levels which it doesn't immediately make sense to get long into. I think bigger picture from a zoomed out perspective, BTC hit 30k-ish, ETH hit 2k-ish, and the market's turned around, and it's worth giving that some space to play out. So I don't think we're finding any allies on the weekly time frame for the time being, at least in terms of the available evidence. I think the daily time frame is going to be our better bet if we're going to have shallow pullbacks to support or anything of the sort. But obviously, as far as outstanding levels, the weekly one at 24k is probably the clearest one we have if the market continues in this fashion, and we'll try to find something closer on the daily time frame. So yeah, as far as weekly goes, not my favorite time frame for BTC. Didn't quite hit the levels that I wanted it to hit, that I thought were clearer. It's struggling at around 30k round number, 29.30 thereabouts. The price action there is bearish, and of course, again, the issue is even if that level gets reclaimed, it doesn't make the bullish case that much more attractive, because then you're not just dealing with mediocre weekly levels, but you're dealing with more significant weekly and monthly levels of resistance. Again, 30k is just, for lack of a better term, there you go, I said it, a bit of a clusterfuck. Now, as far as the daily time frame goes, and just to be clear, the final note I'll make on the weekly is 30k-ish is still resistance, and it's acting like it. And I think the next clear weekly support is at 24k-ish. There's nothing on the weekly that I quite like in the mid to high 20s. There's some daily structure there, which we'll discuss shortly. But also, again, from a zoomed out perspective, if you expect 30k to act as high time frame resistance, does it make sense to try to buy 27, 28, etc. for a swing trade? Generally, my rebuttable presumption is the answer is no. If 30k is going to do a good job, it should do a good enough job for 27, 28k to roll over, especially if that area is comprised of lower time frame levels, which we'll discuss momentarily. Hopefully that makes sense. So yeah, no allies on the weekly for the time being, unless the market just goes much deeper into where we can contest with higher time frame, higher low arguments. Now, as far as the daily goes, also it's been a bit of a dud, a bit of a disappointment. I think price action's been quite choppy in general, but one level that I was paying attention to was some form of this breakout level at around 27s, regardless of whether you want to anchor it, whether it's just this breakout level or take it all the way back to this range low. What we had was a double breakout, but one that didn't resolve bullishly, which is unfortunate because these setups tend to be good. So it's telling in itself that wasn't enough. And the setup I'm referring to, again, I think I tweeted about it as well, something to keep an eye on, is that the market tried to break out here, it wasn't successful, and then it tried again, and the second attempt is generally a higher probability of continuation than the first. On this occasion, even that wasn't enough, which isn't a great sign. In particular, the market seems to be sort of slapped down by this market structure level at around, again, 29, 30k, where we had some chop and then just very clean retests into that sort of lower high region. Again, from a local market structure point of view, you could make an argument that this is the high, this is the low, and arguably a break of market structure depending on how you anchor it, and then the rally was just the lower high before potentially a lower low, or at least trading into these lows, into the range low. So again, I think the best chance, so the monthly is kind of no man's land at best. The weekly looked a bit grim. The only thing that could have rescued the weekly was the daily time frame pushing this thing up towards those weekly levels, and I think it had a pretty good opportunity to do that on this daily close, and it just didn't follow through, which sucks. Now what we're left with on the daily, I think, is essentially we have to contest one level at a time with this consolidation. I still think it's valid. Something I've observed recently is, and this is a bit esoteric, so bear with me, is that the market will have a very clear high time frame level. It'll come into it and it'll chop it both sides, but then eventually when it comes into retest, that you get like a tick perfect reaction and then the actual impulse. The example of this that I spoke about with a friend was actually this daily cluster here. Where at the time we were looking at trading this cluster, and instead it was close above, close below, close above, close below, and my argument was at the time, sometimes the market will take what are good daily levels, chop them up initially, and then make you think that it's not a good level, and then the rounded retest gives you a particularly clear reaction. So that's kind of been something that's a sort of price action anomaly or a bit of behavior that I've noticed recently. And I think we might get something similar within the context of the aforementioned consolidation, which is this one, basically. So if we chop that up into its requisite levels, what I think we're left with is some version of the following, where we have a range high of sorts, and it doesn't matter exactly how you anchor it. Let's go with this, for example's sake, 28.5 as the chopped up range high, and the bottom of that consolidation with a bunch of these lows built up there as well at 27k or thereabouts. And so I think in terms of, again, going into the week level to level approach, especially with some FOMC and macro volatility, if such a thing still exists, coming in this week, these are the areas where I'm looking to do business on lower timeframes, with the proviso, of course, that if this thing starts to roll over, all roads, at least on the higher timeframes, lead to 24k as a monthly, weekly, daily level also. So I think the first reasonable candidate for a bounce would be some version of this range low under 27k, whether that's just an outright reaction or a deep spike to sort of probe who's hanging out below these lows. I think your local range low is under 27k. It would be the first area to play any bounces. That's the first point I want to make. The second point I want to make is I'm open-minded to the idea that this 28.5 range high, while it looks useless and chopped up, I still think it could be a good pivot, and for the time being that would have to be resistance. So just like for this cluster, you got a bunch of fuckery closes that ultimately led to a clean retest. We could get something similar with this range high, where you get fuckery closes, and then when it comes back, you get a clean retest at that level. So what we're left with at face value is 28.5-ish range high resistance, unless the daily close sees some sort of miracle recovery, which doesn't seem terribly likely at the moment, but who knows, weirder things have happened. You've got under 27k as the range low, with the proviso that there could be deeper spikes to see who's hanging out below these built-up lows, and then the bigger breakdown level is at 24k, which we know is the big retest, monthly overlap, whatever. So I don't know whether we spend some time ranging here or not, but I am somewhat confident that the levels within this daily consolidation are still valid and will still be tradable. And I'm sure if you wanted to get more granular with it, you could always chop it up and come up with a midpoint between those two levels for even shorter term trading, although we know that, certainly, that I prefer doing business at the extremes and not diddling in the middle, but something to be aware of nonetheless for those of you who like a bit more precision and lower time frame trades or whatever it may be. One thing that this kind of price action reminds me of, and it's not a perfect analog by any means for reasons that will become obvious momentarily, but it's essentially the price action we had at the preceding high, where the market, and you'll see the distinction in a moment, this is the range high, market tried to break above it, no dice, and we talked about this at length, I think, when this range was happening, and you ended up getting a retest of the range high before the market rolled over. We could get something similar here, where this is essentially the breakout level, the market tries to break it, eventually acts as resistance and pushes us to the range low, if not lower. Again, the obvious distinction between those two examples is that this failed break was cleaner because it was only one attempt. This one is slightly choppier because it had a second attempt that was unsuccessful, but I think ultimately leading to the same conclusion that that is a level of resistance. Hopefully that makes sense. That's kind of all I've got for BTC. Long story short, nothing compelling on the monthly. It's equidistant from support and resistance. If it goes deeper, it can look good. If it goes higher, it could still look shit, so nothing really there. And the close isn't terribly instructive because it didn't happen at an important level. The weekly, I would have preferred to push into the sort of cleaner range low at 32k. For the time being, we don't have that luxury and we have to contend with 29 to 30k. And from the available evidence, that appears to be acting as resistance. And the weekly support at sort of high 20s isn't compelling to me, and I think the bigger weekly level is down at 24, and unfortunately I think even if this ends up in a reclaim, there may be short-term longs to be had, but you still run into a very sticky area in the form of monthly and weekly resistance in the low to mid 30s as opposed to just in the 30s, so that doesn't offer us that doesn't help, really. And then on the daily time frame, it's probably going to be our most useful time frame. And the only determination to be made is whether we bounce/spend some more time in this consolidation, choppy as it may have been, between essentially 28.5 and just under 27k. Those, I think, are the relevant levels. And then thankfully, the bigger picture view, if we roll over, is relatively clear because monthly, weekly, and daily confluence starts to line up at the breakout level around 24k. And again, we're sort of getting ahead of ourselves, given our sort of conservative level-to-level approach. But just so you know what the roadmap looks like, that's sort of what's available at the moment. I hope that makes sense. Let me know in the comments if it doesn't. And generally speaking, when the higher timeframes are like a bit murky and a bit messy and there isn't a terribly compelling bullish argument to be made, I think if you're going to be playing bounces, it makes sense to play them at extremities and mostly for short-term trading. And I think what the bearish case would look like is also rather clear as a result, which is finding resistance at this 28-ish range high, or essentially rolling over through 26 without a bounce, and that would be a range high fake out into a range low breakdown, which is pretty bearish, and that should have enough space for continuation to basically fill in this impulse candle and land at the next area of structure. So hopefully that's somewhat clear directionally. ETH is not providing any respite to those views. The weekly time frame just kind of looks shit. That's really, I think this needs a lot of fixing. If we take the extremity in the form of this highest close, this is just a pretty standard failed break on the weekly time frame. We had a big close through it, immediately engulfed, retested, and now trading below it. So until that's fixed with a weekly close back above 1900-ish, the weekly bias on this is going to be bearish. If it does break above 1900, then I think there's a very decent argument to be made to fill in a lot of this kind of sloppy selling back into the nearest level of structure or the breakdown point, close to 2500. But in terms of what's in front of us, it just looks like a failed break on the weekly and, with a retest that closed below. So nothing really on the weekly that's compelling. And in general, ETH failed breakouts tend to make for pretty compelling signals in general with a decent chunk of follow through. The obvious example would be at the high. That failed break led to some downside price action. Someone tweeted others at me. This is a bit speculative, but the one at 3K as well, close above, close below. This is obviously an extreme example, but in general, sort of structurally, it's not a particularly good look for ETH. And so for the time being, given that's what we have on the weekly at the extremity, and again, coming off the back of those round numbers, 30K, 2K, I think it's worth giving this thing some space. The only determination to be made for ETH on this weekly with the view of the failed breakout is how charitable do you want to be as far as ascertaining the boundaries for this range? Because if you want to be charitable, essentially the range you would delineate is this sort of 1900 range high, and then the much closer 1400 range low. You can see this is a pretty nice level by the significance of the range midpoint with a nice support resistance flip. So you essentially take it level to level at that point where the range midpoint is at 1600, 1700, and then the range low at 1400. I think that's reasonable. Bigger issues emerge if you take a more expansive view of the weekly range, which would be the range low all the way back at 1000, and then you just go from basically the bottom of the impulse to the top of the impulse, and that gives you still pretty compelling levels, but obviously slightly more depressing in terms of price action, because instead of the range midpoint landing at 1600 or whatever, your range midpoint lands at 1500 and the range low lands at the lows, and that would look shit as well. Thankfully, at the moment, however you want to carve up this range, the conclusion for the time being is the same, which is that we've had failure at an extremity, and that's a signal worth taking seriously. If that gets reclaimed, we can have a really constructive conversation. In the absence of that, I'm more than willing to give this thing some space to roll over, given how good ETH failed breakouts have been. So I think some caution there is warranted because we've had a failed breakout. That's sort of the one sentence summary. We all know that in general, I know the Bitcoin daily chart doesn't make this argument easy to accept, but in general, double fakeouts are rare. So if we start seeing weekly price action back above 1900, the bearish argument starts to look weaker, but we can only deal with what's in front of us, and what's in front of us is a failed breakout. So that is that, and I think it's still worth treating on a sort of level-to-level basis. Nothing terribly constructive on the monthly. We can sort of draw similar conclusions to BTC, which is that the first relevant monthly level is at 1600-ish, and that's really it. If that turns into a deviation, then give Capo keys to the city. It'll start to look really rough. But yes, I think the weekly is probably the clearest time frame, and nothing terribly contradictory on the daily time frame as far as that goes. You can kind of see the anatomy, if you will, of the failed break, where this is our pre-break consolidation in one form or another, especially if you take the sort of recent candles. Crazy extension through it, nuked straight back below, and then finding resistance there. So that weekly view is definitely complemented on the daily time frame. And as far as supports go, I mean, it is reaching this sort of volume shelf cluster thing at 1700. But given the magnitude of weekly signals, I'm willing to give it a bit of space, and I'm not too keen to catch this outside of short-term trades and maybe some spikes through the lows and bounces type of thing. But yeah, bigger picture, I take failed breakout seriously in crypto, and the available evidence suggests that we have one on ETH on the weekly time frame. So I'm not going to rush to ignore or counter trade that. Also, leave a like on these videos if you missed them, enjoy them, all that type of stuff. We appreciate your patience during our time away. Only other relevant thing is we've got macro stuff coming up this week with FOMC and some other headline volatility stuff. In general, the impact of macro headlines on crypto has been reduced, or at least recently has been much lower, both because the data has been more in line with consensus, and also because for some period of time, crypto native headlines and sort of macro adjacent headlines like bank failures were enough to mean that crypto flows took precedence over macro flows. But if things slow down and the market starts looking for volatility catalysts, I think macro is going to start to matter more. I don't think we're entirely out of the woods as far as, oh, we've decoupled, we can do whatever we want. I think if macro shits, and in general, if volatility comes back there, given how suppressed VIX has been, the volatility index, that'll still affect us in one way or another. As far as macro technicals go, the monthly close was actually decent. So that needs to be noted. So it did close through this monthly cluster that we spoke about, which is nice. But the other timeframes aren't entirely supportive of that view quite yet. Especially if you take the weekly, it kind of looks like we've reached an extremity there, still at resistance, and no weekly close above it yet. So not entirely supportive. And unfortunately, at least in the past week or so, even when the S&P has been risk on, crypto hasn't always followed. We've seen some lead lag, weird relationships there. Those correlations are kind of murky in general. We've had higher correlations with gold over certain periods, which is also not a super clear breakout at the moment. I don't know if I've got any levels on this gold chart, but sort of even eye test, sort of, basic range high on gold. So macro breakout isn't quote unquote confirmed yet. And even if it were confirmed, from the available evidence, it's not entirely clear that we would benefit from that correlation given the past price action of the past week or so. Yeah, I think that's all I've got, really. So hopefully the levels were clear, at least for BTC and ETH. If things change, we'll be here to update you. Of course, the newsletter comes out tomorrow, trletter.com, and I think we should be back to a normal content schedule in the coming days and weeks. If you enjoy the channel being back, make sure to get us back in the algo by leaving a like, leave us a comment. Thank you again for over 50,000 subscribers on the channel. We're very grateful for that, and hopefully we can keep providing you with content, or at least I can, while Don builds his family and builds a castle, or whatever he's up to. That's all. Thank you for watching. Hopefully this is helpful. Again, any comments, questions, concerns, complaints, I will try to address them in the comments. And yeah, good luck.